Greetings from UN Global Compact Network Sri Lanka to day 2 of Making Global Goals Local Business Sri Lanka. My name is Janani Wijetunga and I will be your MC throughout the course of the day. Day 1 of MGGLB Sri Lanka consisted of deep dives on the climate emergency, gender equality, and innovation. Today, our attendees can look forward to discussions on sustainable finance, the future of work and skills, MSMEs, and sustainable supply chains, with a closing session consisting of takeaways from all the sessions. We encourage the audience to engage in each of today's sessions and look forward to your active participation. Simultaneous Sinhala and Tamil language interpretations will be available throughout this virtual event, and we encourage all attendees to utilize this facility if preferred. The interpretation option is available at the bottom portion of your screen. The session is interactive, and we encourage attendees to use the Q&A function to pose questions to the session panelists. Please tag UN Global Compact Network Sri Lanka and your participation in MGGLB Sri Lanka when sharing on social media. The Network Sri Lanka social media handles are available in the chat box. We start off today's proceedings with financing for the SDGs, the next big opportunity. Sustainable finance or financing for the SDGs is a crucial factor in enabling the achievement of the 2030 Sustainable Development Agenda. In the aftermath of the COVID-19 pandemic, it has become imperative for governments, investors, business, and non-governmental sectors to come together to source and channel financing resources to meet this agenda for a sustainable and climate-safe future. The distinguished panel for the session include the following. Ms. Louise Scott is a director with PwC's Global Sustainability Network and is leading the firm's work in relation to the Sustainable Development Goals. Louise has extensive international experience and networks built through her 30-year career with PwC. Her past 10 years have been spent within the Sustainability and Climate Change team, most recently as lead driver and chief of staff for the global ESG platform and leader of PwC's SDG expertise. Mr. Darshana Gunasekara is currently serving as the Group Finance Director and Executive Board Member at MJF Group. Darshana is a triple qualified finance professional counting over 23 years of work experience. Ms. Marlene Herwig joined UNDP Sri Lanka as the Deputy Resident Representative in August 2021. She brings 17 years of international development experience, working on governance and peace building, as well as in management and coordination roles within the UNDP. Mr. Shivakrishna Raja Ranganathan holds the pivotal role of Managing Director and Chief Executive Officer of Commercial Bank of Ceylon PLC. He currently serves on the boards of Commercial Development Company PLC, Commercial Bank of Maldives Private Limited, Lanka Financial Services Bureau Limited, Sri Lanka Bankers Association Guaranteed Limited, and is Vice Chairman of the International Chamber of Commerce of Sri Lanka and a member of the Council of the Employees Federation of Ceylon. The session moderator is Ms. Nilanthi Sivaprakasam, Chief Financial Officer of Spence PLC, a diversified blue chip conglomerate listed on the Colombo Stock Exchange and board member of UN Global Compact Network Sri Lanka. She is also the Managing Director of Spencer's Corporate Finance Services Private Limited. Ms. Nilanthi Sivaprakasam, over to you to commence proceedings.
Good morning. I am delighted to be the moderator of this session of the conference on Making Global Goals Local Business, organized by the UN Global Compact Sri Lanka, and extend a very warm welcome to our keynote speaker, panelists, and all participants. Ladies and gentlemen, one of the crucial requirements in order to achieve the Sustainable Development Goals is accessing and mobilizing financial resources and channeling them towards appropriate investments for a sustainable future for our planet. From an investor's point of view, it is believed that the SDGs could open up vast market opportunities, create millions of new jobs, and generate massive financial savings through timely action on climate change. It has been estimated that the total investment required to fund the 2030 Sustainable Development Agenda is in the region of $30 trillion. The major challenge we face is mobilizing the available funds towards this goal. The COVID-19 pandemic, which ravaged the world during the last 20 months, no doubt caused a setback in investments in sustainable projects in certain regions, as priorities changed during that period. Therefore, it is imperative for a collective effort to be made by the public and private sectors, investors, and non-governmental organizations to source and channel financial resources to meet the agenda for a sustainable and climate-safe future for our present and future generations. Businesses and the corporate sector need to align their strategies with the development objectives and priorities of their national agendas. What used to be a nice-to-do CSR strategy has now become a must-do corporate strategy, where sustainable development should be embedded in a company's main business strategy. We heard several speakers yesterday express that this is a non-negotiable position and that companies that survive and thrive in the future will be the companies that align their business strategies with the sustainable development goals. Therefore, boards of directors, CEOs, and CFOs have an important role to play in this regard. Similarly, the financial sector, governments, and the investment community too have a significant responsibility and role in facilitating the drive to achieve the SDGs and support the private sector and the MSMEs in particular in their sustainable investments. It has been reported that the issue of innovative financial instruments such as green bonds enabling countries and businesses to access funds from global markets has been increasing in the last few years, with around $500 billion expected to be raised in green bonds globally by the end of 2021. But what of Sri Lanka? What funding sources can local businesses access to drive their sustainability agendas? The Central Bank of Sri Lanka issued a roadmap for sustainable financing a couple of years ago, and I believe that there was an issue of a green bond by a local commercial bank recently. There have also been several discussion forums and seminars organized regarding sustainable financing. However, it was mentioned at a recent webinar by a central bank official that banks in Sri Lanka had reported rather modest figures as they are lending towards sustainable projects in the first 6 months of this year. But since the country does not have a taxonomy to identify what qualifies as a sustainable project at present, different banks may have their own classifications, and that may be the reason why everything has not been captured. Nevertheless, how do we facilitate and encourage banks and financial institutions to increase their lending for sustainable projects? What is the gap we need to bridge? Are we moving fast enough and in the right direction? What role can the government play in encouraging banks and financial institutions to increase their lending for sustainable projects? What is the gap we need to encouraging banks, and lending institutions to support, to finance sustainable projects and support women entrepreneurs with manageable financing costs and longer tenors, which may be required to match the cash flow streams generated by such projects. How does the private sector finance the SDGs while also earning sustainable returns? How can the private investment community in Sri Lanka help by channeling their resources towards the achievement of the SDGs? To discuss all these topics and more, we have an eminent panel of speakers who will be sharing their views and recommendations over the next hour or so. With those few words, I have pleasure in inviting Ms. Louise Scott, Director, Global Sustainability Atlantic PwC to make a presentation on the global trends and market opportunities for the corporate sector to finance the SDGs. I must mention that it's a very early hour in her part of the world, and we appreciate her participation.
Good morning, everybody. I'm hoping you can hear me. Thank you very much for inviting me to join you this morning. As the introduction said, I'm a director at PricewaterhouseCoopers. I've been in the sustainability team, the global sustainability team, for the last 10 years, and that role has been all about helping and supporting our network of client-facing specialists who are helping clients on all manner of things to do with sustainability and climate change. I've also been leading the work we've been doing across that network on the SDGs. So over the next 10 minutes, I was going to try and set the scene for the session and think about three things. I was going to think about what are the changing global perspectives, what's changed in the 6 years since the SDGs were ratified in 2015, a bit of a snapshot of what the current position is and what's really driving action. And then I wanted to look forward and think about the organizations and the initiatives that are really going to be making a difference, and think about what the enabling environment might look like for Sri Lanka. I'm hoping that you can see see some slides. If I look at the first thing, what's changed over the last 6 years? And I think one of the main things is back in 2015, and I remember very well the SDGs being ratified, and a lot of the work we were doing then was all about raising awareness with business and making the business case for why business should engage with the goals. So this is very much a set of government goals, but everyone has always realized that in order to achieve them, then we really need business to really engage. So we had sort of three main arguments at that point, and that was all about the fact that there was going to be a focus for government, and that in order to get ahead of the curve on things like regulation, and also to secure your license to operate, then you needed to be having a strategy that aligned with the government strategy. There was also an increasing amount of research that came out that was showing that actually, if you did manage to align your business to the SDGs, then this would create a number of benefits and savings. And in fact, for a number of companies, we had instances where it lowered cost of capital. We actually saw in our own business, we set a target to reduce our scope 1 and 2 emissions over 10 years. And we managed to reduce them by 77%, but that also saved us £10 million in energy costs. So a real business rationale for doing it. And we were helped in making that argument in 2017, when the Business and Sustainable Development Commission launched the Better Business for a Better World report, which showed that actually the business opportunity from engaging with the goals was $12 trillion a year in revenue opportunities and cost savings, and that would also create 380 million jobs. So in the first few years, it was all about making the business case. And I think if we roll on now, 6 years later, what we're really seeing, and it's been very stark from my perspective, is the whole business environment has changed. As the introduction was saying, the sustainability has become totally strategic. It's become a boardroom issue. It's the topic of lots of C-suite conversations. So it's no longer a CR issue in a side room. It's totally part of core strategy. And I think there are a number of reasons for that. One is, of course, the climate crisis. There's a real recognition that the 2020s really are the decade for action, both for halving global emissions, but of course, for also achieving the SDGs. And that's only 2 business cycles. So that's really becoming into stark focus. But there are a number of other factors, other sort of external factors, particularly regulation. A lot of regulation in the EU, but of course that affects multinational corporations. Also a lot of technology and innovation, which actually is making the difference in finding some of the solutions that we need, and a huge increase in stakeholder expectations. So we've got some really conscious consumers who are asking for transparency. And of course we have investors. Investors are really driving action. The other thing, of course, is that how interconnected and holistic the set of challenges are. So we actually need to see systemic change, both for climate and for the SDGs. So there's a huge need for change in things like the food system or the transport system, the energy system. So everyone needs to work together in that holistic set of issues that the SDGs outlines. And then finally, COVID in particular, I think, has taught us the real impact of unexpected disruptions. So there's a huge focus now on resilience going forwards. So thinking about what's happening right now in the market now, what's making a difference and what's really driving action? I think one really key thing is investor pressure, and some of the world's largest investors are really pushing for change. The biggest organization pushing responsible investment is the UN PRI, the Principles of Responsible Investment. They were established in 2006 and they've grown very steadily since that. They now have well over 100 trillion in assets under management and nearly 4,000 signatories. And all of those signatories have committed to invest in line with responsible investment principles. That makes them want to be active owners and really incorporate ESG and sustainability into their decision making. They see it actually as part of their fiduciary duty as investors. And what we see is a number of the really big famous names in investing, making the link between ESG, factoring ESG in and results, and really pushing the agenda. So we have Larry Fink at BlackRock, who launches annual statements and is very vocal, but other big organizations like UBS and Alliance who are giving, if they're seeing a lower scoring in ESG, they're equating that with lower returns and a more risky investment. We actually have done some of our own research recently. We launch it every year. It's called the Responsible Investment Survey. And our findings were really consistent with that. So we found that nearly 80% of PE investors were incorporating ESG risks into decision making. That 3/4 of them thought that we should address ESG issues, even if that was at the expense of profit. And I think that's quite an important change, that people are recognizing that actually sustainability and performance can be seen as equal to and as important as creating a profit. Almost 70% thought that executive remuneration should be linked with sustainability goals, and that's quite interesting. So we've got a number of companies that are linking their SDG targets with executive remuneration. And nearly half of those PE investors said that they would divest from investments if they had a poor ESG performance. So really driving action there is the PE community. We are seeing that that private equity is at various different stages, so not everyone's at the same place. And often people start with more of a compliance and risk-based approach, but we're seeing that as that matures, people then really focusing on value creation and having strategic advantage, creating value from the transformation, and a real focus on the just transition, so recognizing the social impacts as well as just the economic and the environmental. So one of the main trends we're seeing is a huge increase in ESG investment, and we're really expecting that to accelerate over the next few years. We're seeing lots and lots of money flowing towards low carbon solutions, and actually investors are seeing high carbon investments as high risk. We're also seeing that the cost of capital is often lower for those companies who are 1.5 degrees aligned, and it's higher for poorer performing companies. We're even seeing banks refusing to lend to companies that have got poor ESG performance. And I think that really starts to drive action. When people can't borrow money if they're not performing well, then that really starts to change attitudes. As already mentioned, we're seeing huge growth in the green bond market, and we're expecting that could hit $1 trillion in 2023. But it's not all good news. There's two really big issues, and one is actually the scale of what we need to achieve is immense. Just for low carbon, climate resilient infrastructure, there's a forecast that we need 6.9 trillion of investment a year. Now that's $1,000 per person on the planet per year. So that's a huge scale of the ask is huge. And also we're not seeing the funds in sort of equally distributed across the world. So we're tending to see that sort of 90% of those funds are focused on developed countries rather than perhaps where they're more needed in more developing countries. So looking forward, what do we expect from some of the developments? Firstly, we're seeing big business really stepping up and making commitments. The UN Race to Zero, 1,700 companies committed to halving emissions by 2030. And that includes some of the world's biggest emitters. And we're seeing lots of examples of companies and investors that are really putting sustainability at the core of their strategy. So companies like BP, traditional oil and gas company, has pivoted so that its strategy is now totally about being a renewable energy business. Other big manufacturers like IKEA are looking at investments in their supply chain. We've been working with Microsoft, and they're really leading the way. They've come up with a coalition to look at net zero initiative, and some of the world's biggest names have joined that. So Danone, Starbucks, Nike, and they're helping by outlining the building blocks for reaching net zero transformation, and are sharing their own learnings as they learn. So I think one thing is clear, that is that not everyone has all the solutions, and so they're learning together. And then just finally, what do we need going forward? And I think one of the main things is that we need to think about what can be done to create an enabling environment. So one big issue for investors is transparency, and how do they get quality data that they can really trust? And also, how can they compare that consistently? So we do have a number of initiatives that can look to common standards. And one that is very linked to the SDGs is the WEF IBC, the International Business Council. They have a small number of core common metrics that are aligned to the SDGs. And secondly, I think it's really important that we're putting a price on carbon and nature. So the things that we're really relying on, we're valuing, and we're putting a price on those. And there's some frameworks and initiatives around that, including things like the Task Force for Climate-Related Financial Disclosures. So what I would perhaps encourage the government and the businesses in Sri Lanka to think about how they can help create that enabling environment, how they can be transparent and consistent in how they're talking about their sustainability commitments and their strategy, and how that can help then encourage investors into Sri Lanka. I hope that's helped to set the scene for the session now. I'll hand back to the panel.
Thank you, Louise, for setting the stage for, I'm sure, what will be an interesting panel discussion later on. I would now like to invite Mr. S. Ranganathan, Managing Director of Commercial Bank of Ceylon PLC, to speak to us about identifying mechanisms and funds for corporates to fund the SDGs. Mr. Ranganathan.
Thank you, Nilanthi, and the organizers for inviting me to take part in this global session. Distinguished participants, at the outset itself, I wish to confess that I'm not an expert on this subject matter, but our Commercial Bank of Ceylon, Sri Lankan largest private sector bank, being a member of the United Nations Global Compact since September 2002, having realized the real importance of aligning business strategy to United Nations Global Compact's principles, and I've been actively engaging on this subject, I thought I will share some of my thoughts today at this session. Representing the banking sector, let me first share with you a brief update on how the regulator, the Central Bank of Sri Lanka, is facilitating the SDG initiatives. Central Bank has established the framework required for sustainable finance by launching the roadmap for sustainable finance in Sri Lanka, providing direction for Sri Lankan financial institutions. The main focus was to implement sustainable finance practices to help financial institutions effectively manage environmental and social risks in the projects they finance, and to support businesses that are greener, climate-friendly, and socially inclusive, promoting sustainable finance in Sri Lanka. The government of Sri Lanka's development priorities also focuses on sustainable development as a critical component of its national agenda. The vision of the sustainable financing in Sri Lanka and Strategic Path 2030 identifies the need of a balanced, inclusive, and green growth path to facilitate a transition from conventional Sri Lanka to sustainable Sri Lanka 2030. This sets out short-term, medium-term, and long-term economic, social, and environmental goals in identify 8 sectors such as agriculture, food, education, energy, health, marine resources, transport, urban development, and physical planning and water. Stakeholder consultations were held to develop the sustainable finance taxonomy with the guidance of the IFC in consultation of the Sri Lanka Bank Association as well. Recently, Central Bank has been engaged in defining the criteria for green financing activities. So these are a few initiatives taken by the regulator. If I may go into the initiatives taken by the apex body of the banking industry here, the Sri Lanka Bank Association. Sri Lanka Bank Association also has initiated various measures in this line. In July 2015, SLBA launched the Sustainable Banking Initiatives with a purpose to provide a platform to advance understanding and action on responsible banking practices that can facilitate sustainable economic growth in Sri Lanka. If my memory is correct, I think about 21 member banks have signed up voluntarily to the Sustainable Banking Principles of the Sri Lanka Bank Association's Sustainable Banking Initiatives, which we call it as SBI. Several banks have already implemented social and environmental management systems in credit evaluations and identified key sectors, activities that may be considered as green. Collaborations and discussions with identified sectors are carried out through this SBI initiative of the SLBA. At this stage, let me share some of the key challenges faced by banks in the progression of sustainable finance in Sri Lanka. Most green or sustainable projects require long-term funding, nearly 10 to 20 years. However, banks may not have matching funding for those tenors and are unable to commit for such long tenors. Green or sustainable projects require fixed rates and long tenors, as I mentioned. But the financial institutions are challenged to provide fixed rates when in the volatile market conditions. Customer requirements for most green and sustainable projects are at a concessionary rate of interest. Banks may not be able to offer the lower rate of interest unless we get some funding at such lower cost. In the recent past, the country is also going through different other challenges in addition to the global pandemic challenge. Unfortunately, our country is going through the challenge of downgraded situation, as well as certain other internal challenges, dollar liquidity crisis, etc. And the COVID challenge also has brought in, difficulties for financial institutions and our corporates to engage in these type of initiatives because the approvals are getting delayed and various other challenges are there. Another challenge that we all are faced with is stringent due diligence and lengthy process to access sustainable funds. So while I have just given you a few challenges, let me now share with you how the Commercial Bank of Ceylon has been engaged in these particular SDG activities. At CommBank, the bank's corporate plan identifies the importance and has incorporated green financing business strategy within the corporate. Commercial Bank has developed its own green financing policies with the assistance extended by IFC. The bank has implemented an internationally accepted tool to capture the climate impact of the green financing portfolio. I'm proud to say that the bank has recently been recognized as the highest contributor to GHG emission reductions in the South Asian region by the IFC. Continuous capacity building of the bank team to enhance knowledge of green financing is also happening. The bank has also launched dedicated sustainable green financing products and initiatives. In addition to funding SDG initiatives of our customers, bank has also embarked on various other measures to support customers on sustainable green initiatives, conducting financial literacy, skill development programs, to financial advisory services, etc. A few. We have been also participating in with credit institutions in several refinancing schemes. We have been engaged with multilateral organizations in order to source funding for sustainable projects. Recently, we had Commonwealth Development Corporation of UK, in addition to IFC, DEG, others, ADB, etc., who have supported us in providing funding. For
Excuse me, Mr. Ranganathan, sorry to interrupt, but I think you may need to wrap up now.
Right. So let me quickly touch on the instruments or the mechanism that is required for the investments. Corporates need to reach out to the DFIs, even the corporates, not only the financial institutions, even the corporates are capable to reach out to the DFIs. Regulators also should continue to pursue these credit lines. Then, in addition to all what I have mentioned, what is happening, the other important area that the financial institutions are engaging at the moment is to launch some new structured liability products to meet this type of funding requirements. So the last one I would like to say is the green bonds, which Nilanthi mentioned earlier. One of our bank, I'm proud to say that the Sri Lankan Bank has launched a green bond last year, and that initiative also should be continued. With that, let me conclude here and take up any questions at the latter stage. Thank you, Nilanthi.
Thank you very much, Renga, for sharing the initiatives taken by you and your bank in helping businesses to finance sustainable projects in Sri Lanka. Mr. Darshana Gunasekara, Group Finance Director, Dilma Ceylon Tea Company PLC, a company that has already made great strides in this effort. He will advise us on identifying opportunities and mechanisms for the private sector to contribute to the 2030 agenda. The floor is yours, Darshan.
Thank you, Nilanthi. First of all, I would like to start off by thanking UNGC Sri Lanka for inviting me to share my thoughts on this very pertinent topic. As Nilanthi mentioned, the topic that I'll be speaking on is basically identifying opportunities and mechanisms for the private sector to contribute to the 2030 agenda. Given this is a very macro level topic, I would like to break it down and go to the micro level and take a private sector organization and see how such an organization can identify opportunities and mechanisms to contribute to the 2030 agenda. The way I will do this is by approaching the topic by way of answering three basic questions: what, where, and how. What, as in what is what is the UNGC 2030 agenda? Where, as in where can you make the most impact? How, as in how do you go about identifying the appropriate and appropriate mechanisms and contribute to the 2030 agenda? So the first question, what is UNGC 2030 agenda? In simple terms, it's 17 sustainable development goals consisting of about 169 targets. All SDGs are interrelated, nothing works in isolation, which means when you contribute to one SDG, it has a positive impact on the others as well. Moving to the next question, where can you make the most impact? Identifying which of the SDGs resonate the most with your corporate philosophy. If you don't have a corporate philosophy, then it is very important to establish one with a sustainable element to it. It is one of the most crucial steps when it comes to contributing to the 2030 agenda. One thing to keep in mind is that you don't need to go ahead and look at how do I contribute to all 17 of the SDGs to be able to contribute to the 2030 agenda. You can choose where you can make the most impact and go ahead and act on those. If I take our group, Dilma and MJF group as an example, our founder, Meryl J. Fernando's philosophy in business is a matter of human service. This philosophy is then interpreted through three different angles. The group has 25 plus companies, that is our core businesses. Then we have our philanthropic arm in the form of MJF CF Charitable Foundation. Then we have our environmentally sustainable unit, Dilma Conservation. So the business philosophy is then interpreted through these three angles, which in turn crystallizes to cover 8 of the 17 SDGs. And obviously it goes on without anything to say that since they are interconnected, we are basically covering all the 17 SDGs to a varying degree. And the third question, the most important question, is basically, how do you go about identifying the opportunities and the mechanisms to contribute? Once you have identified in which segment you'll be making your presence felt, it is very important to have sustainability as part of your corporate DNA. Once this is established, all the decisions will contain a sustainability angle, which means each decision will have an opportunity to contribute to the 2030 agenda. Let me take a very practical example. And I want to highlight that this need not be major decisions regarding to your core business. It can be any peripheral decision associated with day-to-day decisions that are being made every day by all the corporates, the private sector as well. Practical example of renewal of a vehicle fleet. So when there is a renewable view, usually what happens is that the companies will look at your budget, the market rate, and then have a matching combination and go for a renewable fleet. But if there's a sustainable element brought in, you will also look at, while I'm at it, how do I make it sustainable? Then you will look for hybrid electric options, thereby directly contributing the 2030 agenda. So the private sector, any company doesn't need to make huge changes or investments. I mean, that can be later on down the line, but to get started, you can do it in your day-to-day life, day-to-day work as well. Same goes for things like, deciding on garbage disposal, for example. If a sustainability element is not looked at, you will probably incinerate all the garbage. But if you are looking at it from a sustainability angle as well, mind you, each of these decisions do represent one or two or few SDGs that we are talking about in the 2030 agenda. So we would look at, okay, how do I ensure that garbage will be sort of sorted? The non-biodegradable ones will try to be reduced. Others will be reused. And also what that means is that the companies will effectively look at ways to reduce the investment involved in those non-renewable or non-usable raw materials and packing materials as well. Moving on to another point in how the private sector can look at contributing to 2030. One of the key things is, and this relates to the core businesses of any of the private sector companies, is anticipate the trend. Current consumers are demanding sustainably produced products and services. The transparency is extremely important. And I believe that the only way to do this is you have to review your supply chain from beginning to the end. And then exactly look at, are there any compliance or non-compliance situations where you can contribute or change your supply chain accordingly. It can start from one decision, but it has to lead at the end of the day to a sustainable supply chain overall. One of the key important things is that sustainability should not be thought of as an one-off CSR projects. Once it's I mean that has been the case in the past, but as it was mentioned, it certainly is not going to be the case in the future. So as I mentioned at the top, if it is in your DNA, it will be embedded to your product. It will be embedded into your service offering. It will be a continuous activity. It will be a continuous journey, which also means you are establishing partnerships and helping those businesses and personnel to contribute to the 2030 agenda as well. If I may take another example, ethical sourcing is very much a part of reviewing the supply chain. We as DILMA and MJF Group are very much committed to this position, and we are very keen on ethical sourcing. And the work that we do, for example, with our plantation companies through our philanthropic arm to uplift their social status, livelihoods as well as increase the quality of living is basically contributing directly to our contribution to the SDGs, as well as those who are involved in our supply chain also uplifting their contribution to the SDGs as well. So that's a critical establishment of partnerships, which is helping a win-win situation. Then finally, I would like to also mention one of the key things is for a private sector company to create a fund to finance sustainability projects, which would not necessarily result in a direct financial return on the investment. One of the key differences between the earlier point and the last point is the fact that earlier point relates to your own operating ecosystem. You are working with your direct suppliers, your community that you are present in, and the people who are connected to your business. However, when you have a fund, and if I put it in the Dilma MGF group context, we have committed, and we continue to do so, 15% of our pre-tax profits are being set aside from all 25 group companies for these philanthropic activities. So instead of now the use of this is basically where the need is. We don't look at where we are, but we go looking where the need is most important, and any marginalized community, differently abled, helping differently abled people, all that kind of thing where it has no direct impact to our business, but we believe that's our in line with our founders' principle or the business philosophy. Business is a human service. We do go out there and do what needs to be done. So one of the key things is also, if you are not able to contribute or build a kitty, so to speak, what are the options available? Like Mr. Ranganathan earlier spoke about, the banking, the financial institutions will play a key role. Probably establishing a green fund or a green bond, so to speak, where the companies who want to engage specifically in sustainable activities and then go towards contributing to the 2030 agenda can tap into these funds. And that would have a preferential, probably lending rates, returns, and that would also mean we as a holistic private sector group will be contributing towards Sri Lanka's 2030 agenda. Given that I'm right on the dot of 7 minutes allocated to me, I will just wrap up. Hope what I've been able to sort of give a basic template, very high level template in which any private sector company can get in and contribute, start contributing towards the 2030 agenda.
Thank you very much. Thank you very much, Darshana, for that elaborate sort of recommendations and explanations as to what Dilma does and your philosophy, which I'm sure other corporates also could take cognizance of. And now we'll go back to Marlene. Unfortunately, ladies and gentlemen, the weather seems to be against us, and there seems to be a little bit of disruption in connectivity. But Marlene, we'll get back to you for you to make your presentation. But please, you might need to make it a little quick because we are running short. We are running a little late.
Thank you so much, and my sincere apologies. You can hear the thunder probably behind me. I will try to be quick, but I think it's important to bring in the concrete solutions as well to these discussions and some of the points that have been asked for. Because as Louise said in the beginning, that to get private sector capital to flow to SDG related investment, we will require policy and regulatory shifts, but also better access to information on investment opportunities and clear standards on criteria. So if I can ask, and we bring up just a quick couple of slides, because it helps to illustrate the work here, what UNDP is doing. And the areas that UNDP is supporting when it comes to accelerating financing. And we have here a circle with 7 different areas, and I'm not going to go into them. This is the overall support, and we will now zoom in, and I'm zooming into the unlocking of private finance for the SDGs, since that's the topic of today. So moving on to the next slide, we see a box which is about exactly unlocking the private sector finance for the SDGs and the services that are listed on the slide and that you can see on the screen under this particular area of support. And here I will focus on the example of an SDG Investor Map, because this is what we are starting and supporting here in Sri Lanka, and one of the concrete tools to address some of the concerns that have been raised. So what is an SDG Investor Map? The aim of an investor map is to address the lack of a viable pipeline and market intelligence, which has been identified both today in this discussion, but also globally by impact investors as an issue when they are trying to identify SDG aligned investments to which they can contribute. And this is a tool that at UNDP we offer globally. So not only in Sri Lanka, but in many different countries. And the process that I will show shortly that produces data that can enable the financial flows towards the SDGs. And the findings that come out of this process are all available and accessible on an online platform, which can be reached globally. So this is a good tool to also link national, local levels with global investors. And here in Sri Lanka, this is serving as a guide to unlock this critical financing that has been spoken to for SDG-driven investments and national planning. So let's move to the next slide where we can see where the SDG investor maps have already been completed in a few countries, and that quite many are starting and are in a similar phase as in Sri Lanka, where we commenced on this process now in September. And we're hoping to have the results ready by February next year. So a quick overview of the process and the 8 steps, which are standardized and therefore undertaken by all countries that do an investor map with UNDP, which are also helpful to create that platform for comparison across countries. And the maps identify these concrete investable solutions, filtering down from the national priorities, looking at economic and social development priorities to subsectors, and then even down to sub-regions, as you can see, and then finally get to the investment opportunity areas. So the aim here, as you can see, is to capture where there are impactful business models within priority sectors for the SDGs, but as has been said earlier, not all SDGs at once, and where new capital can facilitate both scale and wider benefits for the community. So this is where the commercial opportunities intersect with the SDG priorities. So let's move to the last slide here quickly, and just to say again that the findings will be made available in this online platform, and we'll share the link because you can also see what's happening in other countries and the tool itself. And ultimately, the information on Sri Lanka will be uploaded here. And also to say that we really hope that this transparency and the globally set criteria can help to direct finance, both public and private, in line with sustainable development and the goals, and also help to do this tracking. And we know that the challenges are great, but this is one of our contributions, working across sectors to increase the opportunities for the private sector to put its investment of where it makes the most benefit towards the SDGs in Sri Lanka. So thank you so much for letting me share this, and I hope that many of you are listening will come forward and ask about more information, and as well look at it online. And we will be very proud to share the investor map next year for Sri Lanka, together with the government and the other partners that we have on board. Thank you.
Thank you very much, Marlene, for sharing the progress that the UNDP has made and what you're doing to help Sri Lanka achieve the SDGs by the UNDP investor mapping process. Ladies and gentlemen, we seem to be running a little late today, unfortunately, and therefore we've come to the question and answer session. What I would like to do first is, because Mr. Renganathan needs to leave, he has an important meeting at 11. So I'd like to ask a question from him first and then go to the other panelists. Mr. Renganathan, what are your recommendations on the types of instruments that can be issued in Sri Lanka for funding SDG priorities?
When you talk about the instruments, I think even we can look at securitization type of instruments against the receivables. That is one item. The other one, as I mentioned earlier, the green bonds also need to be encouraged. It's only one bond has come out yet, but then we can look at furthermore. In addition to this, of course, we can also look at certain debenture instruments aiming at local investors. But for all these things to be done, I would say that we need to have a real passion to engage in these SDG initiatives. And then we need to communicate the value of engaging in such activities to the market.
Thank you, Mr. Renganathan. The other question actually that leading from what you said was, one of the problems is not just issuing the instruments, but also the pricing of those. Because as I think some of the panelists mentioned, I think you yourself said that, how do you match that? Because obviously companies and borrowers would expect a certain type of concessionary funding, but whether banks and lending institutions can actually do that, because you have your stakeholder concerns and all of that. So that is where I guess the government maybe needs to step in and attract, I don't know, some sort of make it more attractive for banks to lend towards those projects. Just like to have your views before you leave.
Yeah, Nilanthi, thanks. I think here I would like to quote Darshana, what he mentioned earlier, like what their group had been doing. Similarly, we are all now, by this time, almost all corporates, the leading top corporates, have realized the importance of CSR activities. So for CSR, we all have certain contribution kept aside from our profitabilities. So I think it's time now Sri Lankan, without requesting the governments all the time, they have pressed with so many other challenges. Why not some of our corporates look at setting aside certain funds for this, like what he exactly mentioned, not with the expectation of making some returns out of it, but keeping certain funds with the expectation of building, promoting these SDG initiatives, so that we'll be a contributor to the national economy through that effort. So it's a maybe, we have only very few large corporates here, but we should join with the multinationals, etc., and then create that culture of building certain, or pulling some funds into this type of initiatives. That may be another way in which we could assist these initiatives.
Yes, it's something like what maybe whether perhaps we can look at building a fund, a private sector fund, with the contribution of the bank, the private sector, private investors, equity investors, and all of that, to fund sustainable projects, and maybe as a start, the MSMEs before the large corporates fund the large corporates.
Just to add, Nilanthi, quickly, that type of initiatives, we can get the government also to support certain amount of tax concessions, etc., for such funding, etc., so that there'll be certain real value to the overall economic development.
Okay, thank you very much, Renga, for your valuable insights and contribution to this session.
I know there's a question on the chat box also, Nilanthi. Sorry to interrupt. There's a question on the chat box. Let me take up that also, because I'm one who is representing the banking sector. So I think the biggest issue with the banks and lending companies, the question is here is about lack of knowledge among the staff members. I would like to mention, I think not only our bank, even other banks may have done the different type of initiatives, but what we have done is we have a centralized division to look after these type of sustainability initiatives. We have a separate dedicated team. We have a separate designated officer to look after that. And we have been continuously communicating our activities in regard to this, and the staff are being trained. So all these being done. But in spite of that, there may be difficulties at the branch level, but I would like to request any corporates or anyone who wants to find out more details about these initiatives, they could contact the center where we have expertise officers available to support them.
Thank you, Renga. Darshana, there are a few questions for you as well. So I think there's one about what leverage do you make for entities, individuals who are adhering to sustainability or SDGs in your procurement and logistics operations, that is for your supply chain. Do you?
So what we do is that obviously there is a premium required to pay for some of these inventories that we purchase. So we actually are willing to do that. We absolutely accommodate higher value addition. We consider it to be a higher value addition when it's when we procure through those channels.
Okay, and also there's another question about whether you can let us know what the percentage increase in your volume of sales for selling and exporting sustainability products over the years. Is there some sort of a figure that you can share?
That's a tough question to answer because it's
okay.
But how it works is that it actually helps build our brand statement and what we stand for. So we clearly put it out there and we walk the talk. That in turn translates into the growth of the business and what the brand stands for. So you cannot exactly say 5% of my growth is due to the sustainable activity, but overall the brand equity, the brand recognition, and ability to expand into markets are all a combination of the activities that we do, if I may put it that way.
Okay, thank you. That was very well put, Darshana. Luis, I have a question for you. Are we seeing a trend towards more attractive financing for SDG-linked investments for businesses, especially in the emerging markets like Sri Lanka? Because that's what we really need to look at, what's happening in emerging markets.
So the question is it, are there more attractive rates for SDG-linked?
Yes, more attractive financing, either in rates or tenors or, instruments, whatever.
Well, I think, yeah, absolutely. We're seeing the money move to everything ESG related, and ESG, I kind of equate ESG and SDGs, that they're the sort of holistic set of issues that encompass all three. And I think we're definitely seeing different borrowing rates, different sort of assessments of risk of things that are aligned with 1.5 degrees or aligned with sustainability versus those that aren't. But I think actually more importantly, we're seeing banks now being much more reluctant and not wanting to lend to companies that are performing poorly on all manner of sort of indicators. So we're really seeing that the money and the investors driving action, and we're also seeing, one of the principles from PRI is that piece about active ownership, and so I think investors are much more likely to be quite active owners who are going to be pushing policies. We have seen there's one company called Partners Group. They're one of a very large investor, and they've created a $1 billion fund specifically for SDG related investments. And so they're screening as part of the due diligence process. They're screening to see, to someone else's point actually, to the Marlin's funnel. They're looking at, well, for this investment, how much of a difference will it make in the country? Is it addressing a real challenge for that particular country? And that's part of the due diligence assessment. And the whole fund, it's called PG Life. The whole fund is for SDG related investments. So I think we're seeing, entire funds that are focused on sustainability or SDG related things. So yes, and I think that's a trend that will continue.
Okay, thank you, Louise. And there's just another question on women-owned businesses, female entrepreneurship. So how can they, lending is, or how can that be prioritized for funding? In terms of funding options, or what have you seen in emerging markets, for women-owned businesses?
We're seeing a lot of funds. So we work with the UK government has a fund called the Girls Education Challenge Fund, and that's specifically to support women's education. But I think that there are quite a lot of international funds that are specifically for women's economic empowerment, because I do think that is quite a focal area. I guess what it would you'd need to do is actually look at which funds are doing that specifically for Sri Lanka. But I know that there are quite a few UK government overseas development funds that are specifically focused on empowering women and girls.
Okay, thank you, Louise. Marlene, would you also have anything to add to that question regarding female entrepreneurship?
I think that there are, as Louise said, different initiatives. From the investor map, this could be a criteria to look at for the reference group when setting up the process and the guidance. And especially since it does also speak to one of the SDGs clearly. So in that way, it's clearly aligned as well with the SDG financing. We see several countries that have had maybe good experience with this tool, although not specifically on supporting women-owned companies, but both in India and Singapore, we have good examples of zooming in to nationally set investment opportunities. So I don't have other concrete private sector funding initiatives for women-owned companies, but it is definitely part of the SDGs, and it is also a criteria that is seen as enhancing the possibility to achieve the SDGs. So it should definitely be considered.
Okay, thank you, Louise. I just have another question to you, which I would like you to answer quickly if possible. The investor mapping exercise that the UNDP has been working with other countries, how has it increased investment opportunities in those countries? Because I know it's just been started in Sri Lanka, but if you can share with us some examples.
Mm-hmm. So, and also in other countries, it's still a new tool, so it's just over the last few years. But as I mentioned, in Singapore, there is a large portfolio of SDG-focused investments. So that's driving investment towards products and services, and actually also including investments from a regional perspective. In India, one has set up a system where there are now 18 open investment opportunities. So that's up and running and working with potential investors and funding entities. So that's another example that we are looking at when creating the SDG Investment Map for Sri Lanka. In terms of examples, otherwise in Colombia, there has been a strong focus on renewables. So that was also mentioned earlier today as a specific example. And I can also mention in Ghana, where one has used it also for the government strategy. So trying to align the government investment strategy for the country using the findings coming out of the Ghana SDG Investor Map.
Thank you, Marlene. I think we are sort of we've gone over schedule, but I just like to ask the three panelists a general question, and that is, what should Sri Lanka be doing now, to enhance the sustainable financing in this country? Maybe based on your experiences overseas, or as Darshan, has elaborated what they have already done. Just very quickly, if you can just give us in a few words what we should prioritize. Louise?
I think for me, investors need information they can trust. So I think some kind of consistent, even if it's a very small number of consistent metrics that everybody's using that that allows consistency and comparability and can be trusted.
Thank you. And Darshana?
If you look at green finance, I just want to take a slightly different view in terms of what the government could do as well. So if you look at a very loose definition of green financing, it's basically financial regulation standards or norms and products that pursue an environmental objective. I think in that context, we like a country like Sri Lanka, focusing on energy transition becomes very important in my opinion. And when you have certain green initiatives aligned to this kind of, if the government can facilitate such infrastructure development, like we also mentioned, if the information availability is filtered down through to the individual investors, then certainly we are going to be able to focus on some of the SDGs very, very closely and then achieve what we are supposed to achieve in that respect.
Thank you, Darshana. Anything to add to that, Marlene?
Well, I guess I just have to end with saying that I very much appreciate what the other speakers have put forward and how well our Sdg Investor Map fits into that when it comes to reliable data that can be trusted and with a robust process. And I look forward to work with many of you. And maybe lastly to say that this kind of multi-stakeholder approach is also important, where government, private sector, and other organizations come together to also learn about the needs of the other actors. So thank you so much for organizing today.
Thank you. And thank you very much to all the panelists for taking time off your busy schedules and sharing with us contributions which made our session very, very interesting. And I'm sure UN Global Compact Sri Lanka chapter will take some, there will be several takeaways from this session, which we can work towards and take towards enhancing Sri Lanka's financing opportunities for sustainable finance. Thank you very much to all the participants for your patient hearing as well. Thank you.